Hello there, this is binaryoptions.com, and under our Binary Options Academy project we are discussing a possibility of trading call or put options on retracement levels, that are associated with 50%. And if you go and scroll under our projects that are listed on the website, on the Binary Options Academy, then you will find out that 50% retracement to be used in trading are mostly common under contracting triangles. How is a contracting triangle looking like? Well, it is looking exactly like this. You have a wave A to the downside, and then a B wave, and then a wave C, and then a wave D, and then a wave E, and then market breaks higher. This is a contracting triangle. Now, when you trade binary options, we are not really interested in the breaking higher after the triangle, but we are interested in being positioning on the right direction. And let's try to label this triangle in here. So this would be wave A, this would be the B wave, then we have a C wave to the downside, A, B, C, D, and E, A, B, C, D, and E. And normally what we gotta do is to go and take the longest leg of a contracting triangle. In this case, the longest leg is wave A, and then to find out the 50% retracement. So this is the 50% retracement. Let's try to put a mark in here. And then we just go and delete the fib, and we take the 50%. Let's actually put a different value, a different color on the 50% trend line. Let's make it in blue. And if our bias is that this triangle is going to break higher and not lower, then what we gotta do is to try to trade put options, call options, sorry, on any move lower. What does it mean on any move lower? On any move that price goes into the territory, into this territory below 50% retracement and the longest leg of a triangle. Now, of course that we are not going to trade any or only one option, and that option only with from the 50% retracement. No, what we want to see is another 50% retracement or on the resulting channel. So we go and take another trend line and we put it something like this, and that would be the perfect case for trading an option. So what do we want to do? We wait to see wave A here to unfold, and then on any move higher we want to go and buy call options, first of all more timidly on the 50% retracement, but then more aggressively on the 50% of the resulting channel, then another one on the 50% here, and just like that we are on the right side of the market with three call options waiting to expire in the money by the time the triangle is completed. It is important here to note that the triangle is completed only when the B2D trend line is broken. Only when the B2D trend line is broken like it is supposed to be broken, taking into account the time element and so on. But also it's important to know that the expiration date that needs to be taken into consideration must be calibrated on the expectations. I mean, if we have only three legs of a triangle, it doesn't make any sense and the triangle is on the daily chart, it doesn't make any sense to trade an expiration date. There is end of day expiration date, but it must be on a bigger perspective. End of month expiration will do the trick, and maybe trading a call option only for the move into the D wave in here. Stay tuned for the second part, trying to look at this Euro-US dollar here. If we have the prerogatives of a triangle, and if yes, what would be the expiration dates used and where we were supposed to buy call options. Stay tuned for the next part, please.